Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. Dubai's credentials as the place to do business has been given a firm push with a new ranking, naming it the third most dynamic city in the world, just after San Francisco and London, and ahead of Chinese cities Shanghai and Wuhan. 111 business hubs were evaluated in the new study, the City Momentum Index, released by the real estate consultancy Jones Lang LaSalle. In particular, the rankings reflect how well or otherwise a city is able to get ahead and meet its socio-economic goals and the momentum this can derive for its commercial realty. New York, Austin, Hong Kong, San Jose and Singapore make up the other 5 cities in the top 10. Dubai also figures in the list of elite cities in the index, based on the fact that they, along with other cities making up the top 5, accounted for a quarter of direct commercial real estate investments in the period 2012-13. According to the report, Dubai is bouncing back. Property prices are rising, but growth appears to be on a sounder footing than in 2006-08, underpinned by the city's strong global connectivity and its status as a service hub for the region, adding that the city's ranking also reflects its status as a staging point for the increasingly dynamic sub-Saharan Africa. Union National Bank, Abu Dhabi's 4th largest lender by market value, on Sunday revealed that its 4th quarter net profit more than doubled from a year earlier. The bank said in a bourse filing it made a net profit of 306 million dirhams in the 3 months to December 31, up from 136 million dirhams in the prior year period. UNB, which is 50% owned by the Abu Dhabi government, made a full-year profit of 1.75 billion dirhams compared to 1.6 billion dirhams in 2012, helped by a 10% rise in non-interest income and a modest gain in net interest income. Banks in the United Arab Emirates have reported strong earnings growth for the 4th quarter as they benefit from the improving economic picture in the UAE, especially in the key real estate sector. The bank recommended a cash dividend of 15 fils per share and a 5% bonus share issue for 2013. This was up from the 10 fils distributed for the previous year. Deposits at the bank grew 3% in 2013 to 65.1 billion dirhams, while net loans and advances increased 5% to reach 60 billion dirhams at the end of December. Porsche has revealed a record year of regional sales across the Middle East and Africa, with figures up more than 26% compared to 2012. Porsche delivered 11,609 new cars across the region in the January to December period of 2013, up from 9,171 in the previous year. With the UAE accounting for more than a quarter of regional sales, Porsche credits it with playing the most substantial role in its success. In Dubai alone, sales figures have increased by 14%, with 1,892 vehicles delivered in 2013, while Abu Dhabi contributed with a total delivery of 1,422 cars, marking more than 34% year-on-year growth. Kuwait posted results 36% higher than the year before, up by 400 to 1,496 new cars delivered. Weakness continued and markets slumped last week as several central bank rate hikes from nations like India, South Africa and Turkey failed to stem the meltdown experienced in emerging markets. Following the announced Fed taper in December, emerging markets have been hit hard. A slowing growth forecast also amplified the weakness and further weigh down investor sentiment. Through the last week of January, global funds pulled out an estimated $6.3 billion from emerging markets, the largest outflow since August 2011. Also weighing down sentiment has been a poor run of numbers from the world's second-largest economy, following a weaker Chinese GDP reading. Sunday's Chinese PMI, which measures manufacturing activity, dropped to 50.5 as output and new orders slowed. To talk more about this and the week ahead, we earlier spoke with Gaurav Kashyap, the head of futures at Al Pari Middle East.
It's all about central bank rate decisions this week as the European Central Bank, the Reserve Bank of Australia, and the Bank of England will be announcing their rates in the week ahead. This will all be capped off by Friday's US non-farm payroll numbers. So once again, we have a lot of key points which will be driving risk sentiment in the week ahead. Now, following the large sell-off in equity and currency markets from last week as a result of weakness in emerging markets, we can expect some of that weakness to underpin the risk-off sentiment in trading this week. Once again, looking at the calendar ahead, we do have a couple of key pieces of data in the lead up to that European Central Bank rate decision, which could perhaps hinder and push Draghi towards announcing a rate cut as early as Thursday. Now, of course, Draghi has held rates at a record low of 0.25% since November of last year, and expectations are for him to further cut the rate to 0.1% the next time they meet on Feb 6th. Now, this is as a result of weakening inflation. Once again, we've seen inflation in the euro area dropping to 0.7%. This is down from December's reading of 0.8%. So overall, we are seeing the euro drop against the US dollar. It is now trading at a 2-month low, so we can expect weakness in that pair, and any type of bounce or higher move up in the euro against the US dollar could present an excellent selling opportunity in the lead up to that announcement. Looking at Friday's US non-farm payroll report, following a disastrous December reading where the figure came in at a low of 74,000 new jobs added, the lowest figure since January 2011, we're expecting the figure to be back up to around 175,000. Remember, weather was blamed on the last report. We're not expecting that to hinder this month's report. And overall, we can expect the unemployment rate to come in at 6.7%. But once again, we will be watching that overall participation rate and would need to see that figure increase to justify those gains in the unemployment rate. But overall, the Bank of England and the Reserve Bank of Australia are expected to keep rates unchanged. So once again, we expect risk sentiment to remain on the back foot. The US dollar will remain in demand in the week ahead, and with losses expected to continue for the euro.